What's up, guys? It's Jonathan, owner, Masters in Trading. Today we're going to look at bonds. We're going to look at the yield curve. Big believer, yield curve drives the overall market. Yield curve is the alpha male. Understand the yield curve first. After you do that, you start to understand steepeners and flatteners and where there's strength and weakness in the yield curve. Then you compare that to bonds, you compare that to equities, you compare that to metals, you compare that to energies. In my opinion, how I approach the market, everything starts at the bonds. So I'm going to review the bonds for you right now. Here's how we look at the bonds. You should never trade a 10-year ZN or a bond contract outright without looking at the rest of the curve. So even if you're an outright trader, spread trader, outright trader, an outright trader is just trading one product. Even if you're an outright trader, I encourage you to look at things relative to one another. So what do we have in front of you? Up here, 2-year, 5-year, 10-year, but this is really a 7-year if you look under the hood. This is the 10-year. So 2s, 4s, 7s, 10s, blue is going to be 18, and then the white is going to be 30. The white, inexpensive relative to everything else, but we need to drill into it. So the white is going to be the UB. So right away, the furthest out on the yield curve, not the 2-year, not the 5-year, the 30-year, way out, is the weakest. Without a doubt, going back to the beginning of the year, we can see clearly that relative value, UB is inexpensive relative to the others. But now we need to drill into it further. To do that, I'm going to hit the beaker right here. I am using a proprietary program. It's called Bond Edge. It allows us to follow the entire yield curve. Show study using a cycle going back to the beginning of the year. That allows me to start this analysis January 1st, 2020. If we keep scrolling down, now I'm going to remove the 2-year and I'm going to remove the 5-year, because right now what we've seen is the 30-year, the UB, the way back end of the curve, is really inexpensive, right? Relative to its neighbors on the curve. So I want to look closer at it. So I'm going to take these two off. We're only going to look at the ZN, the TN, the ZB, and the UB. Okay, apply, okay. And now here's what we got. You can see, again, beginning of the year, looking at like March 1st, they were perfectly valued pretty much. Now remember, these aren't one-to-one. I do have the correct ratios in our Bond Edge trading system right here. If you're interested to learn more about that, I'll leave a link below in the video description. So, but what do we have here? We still know that UB is dirt cheap, right? It looks like the ZB and the ZN kind of right middle of the road. But what do we have here? What the heck is this? The TN. That's interesting. So right now, again, 7-year, 10-year, 18-year, 30-year. But look, there's a kink. There's a kink in the curve. How do I know that? 7-year and 18-year are kind of kissing right here. A big hug. 7-year and 18-year are right here. Look at the 10-year. Rallying, expensive, relative to that UB. So now what I want to do is I want to dig further, because here we're looking at the outright bond contracts relative to one another. We can see the UB is inexpensive relative to the TN. But now I'm going to look at the spreads, because for me, I can see things more clearly looking at the spreads. But I wanted to first show you the outrights. If I hit the beaker, this top is going to be outrights. I no longer want to show that study. okay? The bottom is all spreads. Show study, cycles, year. So we're starting at the same point. Again, we scroll down, having the correct ratios. And here are all our spreads. The spreads that I'm going to focus on is going to be the bub, the knob, the NTN, because what I want is I want the different spreads that include the 4 products that we just talked about. And the 4 products being the ZN, the TN, the ZB, and the UB. This is going to be the TN UB. NCB is going to be TN ZB. The bub is ZB UB. The knob is going to be ZN ZB. And then this is going to be ZN TN. The null too we could look at. The null is going to be ZN all the way out to UB. So 7 years all the way out to 30 year. And then the fob is going to be 5 years all the way out to 30 year. Let's not put the fob because I don't want to bring the ZF into the study. We're just looking at 4 different futures contracts right now. Okay, apply. Okay. Whoa. I like looking at things in spreads. So the 4 products, all their different combinations are on this chart using different spreads. But now let me clean it up for you a little bit. And let me show you the really, really good stuff within this chart. I'm going to take the bub out, the green, and the null. It's not really doing anything for me, and I'll show you why. Bub, I need you to sit on the bench for a little bit. Null, take a seat. Now we got it down to this. Something I want to point out. TN UB. This is 10s to 30. 2s, 10s, 10s, 30s. Usually, they talk about the middle and the front end of the curve being 2s, 10s. The back end being 10s all the way out to 30. Percentage rank. What this says is over the course of the cycle, right now, it's at its 100% rank. So going back to the beginning of the year, this spread, this relationship, 10s to 30s, it's the highest it's been. But 10s to 30s, what about right before that? 7 to 10. What's that doing? 7 to 10, 10 to 30. Well, if you look 7 to 10, that's going to be here. That is selling off. That is flattening. These are steepening. This is wrong. I'm going to take this off. The thing that I want to show you was the 100%. This is rallying like crazy. So now the nub, we're going to have him take a seat next to his buddies. Okay, apply, okay. And then finally, I'm going to take off the NCB as well. If you haven't learned about this trade, this is by far the best futures trade that I know, and that is a freaking awesome trade. So here's the trade. I just walk you through the entire process that I go. Using these tools, it just makes things so much freaking easier. NTN, look, percentage rank. Going back to the beginning of the year, 35% off its lows, 85% off its lows, and 14% off its highs. So here's the trade, guys. The trade is we would sell ZN and buy ZB. What you also would do is buy ZN and sell TN. This will come back. If you want to know what your risk is, look right here. Over the course of the last 5 months, going back to the beginning of the year, if you were to hold the blue line, you would be down $6,000. If you were to hold the light blue line, you would be down about $1,000. But if you put this trade on, how much meat is there on the bone? Well, when this rallies and this comes in, sells off, as it's done every single time, you're going to make about $5,000. The difference between these two numbers. That's the trade I like. Hopefully you enjoyed that explanation. This is exactly how we look at every asset class, but everything stems from the bond trade because bonds are the alpha male. My name is Jonathan Rose. I'm the owner of Masters in Trading.